Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, August 25th, 2022. The markets did continue for the most part to power higher today, and within the last hour, and actually more stronger in the last half hour of trade today, the buyers moved back in as everybody became more relaxed that tomorrow's speech by Fed President, or Chair, I should say, William Powell, is going to soothe the markets, is going to bring out the buyers, is going to show that, hey, we're winning and everything is A-OK. And I have no evidence of that being the case, nor do the people that are buying in, but this seems to be the attitude, at least that's what's being put out by the press. But I just want to take a look. Let's take a deep dive into how it's being counted right now and what could occur as the market reacts to whatever comes out tomorrow from the Fed chair. So right now I continue to look at this as the high at 43, what was that, 43.27 was the completion point for an intermediate wave A of primary wave B. There's primary wave A's completion point down there at 36.39. So what we're looking for on a primary degree level is there's primary A. So within primary B, we're looking for an intermediate A, intermediate B, intermediate C to complete primary wave B, and then a nosedive in a primary C wave, which will take us much lower than what I would imagine most people would imagine. So in any case, right now, within that, A is done, intermediate wave A of primary B. Now we're in this ABC process to put in intermediate wave B. And I know, again, I'm going to say, I'm well aware that we're now counting and all the subdivisions are going to count out as ABCs. So we have to remember degrees. And as we go down in the degrees, we're looking for the same pattern. Could come in two ways, either zigzag, which is going to include 5-wave structures, or it's going to be a flat, which also can include 5-wave structures, but mostly because it's going to be a C wave. All C's will be 5. So again, there's going to be a lot of A's, a lot of B's. And so what we have to remember is that they're building blocks, and now we're working it in reverse in terms of how this corrects and what the next move, larger move, is going to be. So we're in an internal intermediate B wave. It already projects a likely bottom for this particular sequence between 39.83 and 3900. So those remain in the picture for right now in terms of the market would need to turn and come down. So this would be minor A of this intermediate B wave. We get another B wave, but we get a minor B wave up of this intermediate B wave, and then we get a C wave down, a minor C wave down, which likely would be expected to bring us into this territory. Now, could we get a negative reaction from the Fed, from the Chair Powell speaking? Yeah, we could, and we're likely going to see some additional moving up, and we're probably going to end up by the daily 200. That's why I started here and left it on here. We have the daily 200 definitively and most clearly in play right now. It is still flat, which continues to suggest it's a level of resistance. Above that resistance, we have fib resistance at 42, 44, or 45. And you can say it all the way up to 50. And then right above that, we have additional resistance at 42.65. Now, I would be still looking for a minor B wave with still a decline to happen. Powell begins to speak at 10 o'clock tomorrow morning. So what happens overnight is likely going to be the lead-in to where we get while we wait for Powell to speak. Our markets will barely be open a half hour, and I would imagine that, depending on how they finish up in Europe, before we open will depend, I think, on how we open. And I'm sure there's still going to be stacked buy orders. As the evening rolls on, they're more and more convinced we got to get back in, or we just got to build, or whatever the situation might be. But now let's take a look at it. So again, we can continue higher. There we have resistance. The zone actually sits between the 200 period EMA and the 200 period SMA. So again, for right now, that's pretty powerful. And if we get up to 4,300, folks, we're knocking on the door of that high at 43.41. It can power up. It can. We've seen this now. I'm going to break this down and go to the hourly chart so I can get more detail on how this can just begin to power up if it has full intentions of doing so. What we're building on is, again, if this is the B wave and minor B wave inside of a larger one in progress, then we're expecting it to find resistance actually now between these 2 points, between the 200s. And we're already surpassing the hourly 200 EMA, which was just below 4,200. We're closing above 4,200, waiting now again for 45 minutes so we get Globex. If it continues to power up, the next logical target would be 42.20 to 22, which is where the SMA is. And then we have 42.45 right behind that. Those are fib numbers, 50% and 62% retracements for this B wave. So we'll have retraced 50 to 62% of the A wave at these levels. Common stopping for the wave that I am currently looking at. Now, I need to include, because it's very important, there is a possible path to where I can label, it's not my preferred, it's not even really an alternate, but I'm putting this out there because if this continues to power and it just keeps on going, and we've seen it, if this is 1, 2, and now we're getting 1, 2, maybe another 1, 2, and this thing's going to start subdividing in the third, it's going to power straight through all of that. We've seen it. We've seen it on both sides. We've seen it coming off. We've seen it going up. It powers and subdivides as it goes. So, and it could reach, and it could get there. From here, that's another 200-point rally. Can we get there? Yeah. We did today. Why can't we do it again tomorrow? When they have more oomph to go do it, because then we'll have heard from Oracle Powell, and he'll be certainly tell us what we need to do. So it's all out there. If this indeed is going to be counted out as an A, a B, and a C for an intermediate B wave, right? Then we're in a C wave rise, which will take the market above 43.28 before it is complete. Why? Because we're looking for that on an Elliott basis. Right now, we have, this is the 4-hour chart. There is intermediate A. This would become intermediate B. And then this rally would become the starting phase of intermediate wave C. And you're looking at that this thing just runs in a 5-wave structure. Then we're going to have to start comparing it to this. And then we're completing the primary B wave. All of these things are on the table simply because we're already counting it out. So that is the count. Now, if it stops at these levels, within the fib resistance, within these moving averages, what did we say on the hourly? It was the 200. On the 4-hour, it's the 50s. We're above the 1, heading for the next same area. 42.21 is there. Let me go back down to that hourly chart, and you're going to see it is the 200. And this 200 is sitting at 22. The 50 is sitting at 42.20 on the 4-hour chart. So we're all in a line. These are starting to turn. And it does favor that we're likely going to go up. Doesn't mean it's going to stay up there, folks. Again, if it does, and what would support it is the fact that these on the 1-hour chart, they're starting to turn. If they all manage to get above this, it's going to be hats off, folks. We're going to go higher and we'll break that level because it'll just be a resumption of like, oh my God, everything is beautiful again. And the whole thing, now this is the kicker, the whole thing, the entire move is a B wave. B waves are notoriously deceptive, lies, bull, junk, not in touch with reality, not paying attention to what truly is happening behind the curtain, and then making it a decision from that. It's purely emotional trading. Fear of missing out, fearing, oh my God, the market's going up. I need to get in. Oh my God, it's going down. Should I sell? It's pure 100% emotion. And usually it's like if we had an idea, if we had a plan, if we had a trade plan, then that would be most helpful because you're able to then trade these instead of being like in shock, being presented with a account that possibly could say, we're going to turn. And we have a possibility of turning from here and running back up to 4,300 for starters. That's out there. Not saying that's what's going to happen. The only one that can tell us, folks, is the market. William Powell can't tell us. It's the market. It's how we're all going to react together. And Powell could say that he's got to leave the stage because he's got to poop his pants, and they'll still buy this market. It'll be the emotional response. And that's what I'm talking about. So heat is going to be the catalyst. But it produces an emotion. And it's everyone will come rushing in. If someone starts buying and they keep pushing and pushing, you're going to get everybody else to join the party. And why not? That's where it's going. They're looking for value. All these buyers are moving back in. I won't look for a reason why. Other people will, and they're the ones sitting waiting. So my point here as well is that if we get this reaction and they start breaking through this, my God, if you're a day trader, participate. You will know on a smaller time frame when to get in, what's going on. Follow the price action. Follow what the candles are telling you. Follow what the moving averages are telling you. By then, if we're breaking, we break above this, we're going. Our next levels would be, that's the fib, and that's a fib. After that, we're gone. I'm not going to be sitting on a short position waiting for the turn or waiting for some confirmation that we're moving higher. We will be moving higher. And quite frankly, it's like if you care why we're moving higher, you're counting your loss. So rules, right? One of the big ones that people seem to break or have a problem with is that they let their losers run because they're not sure of what's behind all of this. And that's the problem. At this level, at this point, at this juncture with your money, the why doesn't matter. And because you're hoping that it'll turn around and come right back down. And it might, but it could go up another 200 or 300 points from here before it does. So this is not a lecture on bullishness or bearishness. This is just a talk, on what we're seeing and what the possibilities are and not worrying about what's going to trigger it. When they turn those algorithms on, folks, if they come in, they'll come in with power and they'll buy it. If they like it, or if there's any hint that they're okay with it, someone's going to start to open the floodgate and they'll go. That's all I'm trying to say. And instead of trying to wonder, well, who's right, who's wrong, why are they doing it? Who cares? Participate, please. If you're in a position that needs to be changed, do so. You already should have a point of where your trade becomes invalid. That is something that I really work specifically on with people. Have a trade plan. That means you have your entry point, you know why you're getting into the position, and you have an exit point, so you have a target that you believe the market's going to go to. And lastly, you have a point where you will get out of that trade, so where your stop will be, when the trade becomes invalidated. When it's no longer valid that the market's going to go where you think it's going to go. That's your stop loss. It's there for a purpose. All right, so for tomorrow, I'm sticking with as I have labeled it. And that suggests that we've got a little bit more to go on a B wave up. And then we're going to get a C wave down, which ultimately I still believe if it happens, that we'll end up back down here. I think that we'll find stronger support at 4,000, as will be evident on anything coming down, because it's just what the market believes. 4,100, there should be some fair amount of support at, unless the news is strong enough to just drive it. But again, on the 4-hour chart, a drift and a break back below, and then a break below that low, which is 41.13, 41.10, takes us below this 200 EMA. And then again, that's on the 4-hour chart. And then we have the SMA down at 40.64. Then if it does that, it's going to here. And then this becomes an open window. Now you got upside, you got downside. Both have I'm going to tell you they have a 50-50 probability. What if they don't like what that guy says? What if he doesn't appease them by giving them the information they're so desiring of? Then what happens? Watch Bloomberg or watch CNBC condemn, they don't know, blah, 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 stuns the market, da, 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 da. No, he's not stunning a lot of people. Consider this, folks. And thank you for one of the listeners, by the way, one not a listener, but one of the subscribers. Thank you, Diego, who commented one day telling us how much money had been coming in via retail. We're talking like over $5 billion. Retail money coming in. Who do you think is selling it to them? Think about it. So, yeah, they're coming in with that kind of money. Somebody's got to be selling it to them. And I think it's the bigger money. It's the ones that needed this move to get out of positions. It's why things work to expiration prices, folks. And by the way, tomorrow's expiration. So there's all that to go on. Let me get over to the NASDAQ. In the NASDAQ, same deal. We have it out here on the daily chart right now. And it's the same deal. All right, we're counting this down. We got a wave A. We're looking for a wave B. It has resistance at 13,173, and that's just 382, right? But this is a B wave. Again, same drill. It'll find resistance between 50% and 62% if this is a minor B wave. And that just happens to fit right between 382 and 50%, because that's where our 200s are. Right now, market is pretty stuck and sitting at that 200, the hourly 200 EMA. Above that, we have 173. Above that, we have the 200 SMA at 3281, smack dab at the 50% fib level for that B wave. Now, continued upside can bring it up to 13,390, and that's the 62% or 618. So those are the zones. Not much in between. So in other words, if it breaks, you start looking for that. Again, it's going to have to power because it's got to get rid of all of that negativity. That went down for a reason. Now suddenly that doesn't exist anymore. That's what's got to be pushing in both directions now, because a lot traded down here. Our points of control were real low today. So there's a lot of shorts, I don't know. But in any case, we have room to the upside on the hourly. On the daily, it's pretty strong that we're coming from this type of a position. So we could go. So again, as in the S&P, this also, I can count this as a minor A, minor B, change that to minor C, and stick intermediate degree B underneath it, which would put this in a C wave up to complete the primary wave B. Now, if that's the case, and trust me, if you trade this NASDAQ, you know that it can power. It can power up in a direction or power down in a direction. And it's like, don't get in its way because it'll tear you apart. When the supply and demand changes from one side to the other, where the buyers have the demand and the sellers have the supply. So they're going to have to come running after them to get it. And they're going to move it higher, higher, higher. So the same thing if now we're looking for buyers. Well, the buyers are in demand. The sellers have the supply that they now want to dump. And the buyers are like, yeah, well, I'll take it off your hands. But here, as it moves it down and down and down. So if it's the buy side, I think this is an easy call. Up 40 from here, come on. NASDAQ, blink your eyes. No, excuse me, up 140. Blink your eyes still. I was up 215. 140 takes it up to here. 200 takes it up to 13,300. You know, and this is yesterday. Globex, Globex low is 12,822. Coming in yesterday. Yeah, so we're moving and they can power and they can get up and they can get going. Now, if it starts to break, it's going to do it power, not grabbing, dropping, grabbing, dropping, grabbing, dropping all the way up, which shows you more. It's like, oh, it's tired, exhausted, but they had to do it. If they power, it's because they're changing their mind. And they're coming in droves to reverse things. Tomorrow expiration. You think for 1 second, look at that. Told you yesterday, they're going to look for 170 in Apple. Bing. Well, that's where we get to start the day. They get to push from there. So these stocks, so much for earnings that everybody wanted to puke on. Stock closes up $7. Okay. So they can power. And so I'll be looking for that. Downside now has to do it in the same fashion. If William Powell says something that truly is displeasing to the ear of the longs, of the buyers, of those that want to be bullish, whatever you want to label them, and they turn this market, it's going to likely drop the same manner in which we would expect it to go up. Again, all this needs to be reversed. It's going to break all of these moving averages. It's going to start to come down below the 8, the 20, the 50s. And then that's it. Then this is done. That's the B wave. Again, I'm just wanting to let you know that would be the B wave. Right? This would be this B wave. That's minor A. This would be minor B wherever it stops. And then it's a minor C wave down. And that's what I'm thinking we could get down into here. Here to here, depending on how hard they sell it. Both have a chance, right? Can you tell me with 100% certainty what Chairman Powell is going to say? If you can, then you're not telling anybody because you just went out and bought everything and you're waiting for him to open his mouth, or you've already sold everything, you're waiting for him to open his mouth. Anyway, I'm going to leave it there. We have a lot going on again. And so a little pickup in the tempo, a little pickup in price movement. Trading was better because of it. Volumes picked up a little bit. We saw the really big strength come in that last 45 minutes. That's where they really gave it a good old-fashioned push. And that's the type of push I'm talking about, when they're just like, we're buying, get out of my way. If you step in, they take it from you and just keep going. So please do not try to catch a thrusted knife. It's going up. All right. I'm going to leave it there. Follow the moving averages. We talked a lot about them tonight. And our next update will be on Sunday, the 28th.